Good evening and welcome to our market coverage. Let me start with the numbers that are shaping today's session. The Nasdaq composite, using QQQ as a proxy, is trading around $711. The S&P 500, through SPY, stands at approximately $737. The VIX index, our key fear gauge, has jumped 6.34% to 18.28. That is a significant move that deserves our attention. The 10-year Treasury yield is at 4.38%, while the dollar index holds firm at 97.94. In commodities, WTI crude oil is trading at $96.99 a barrel, and spot gold has surged to an astonishing $4,721.80. Bitcoin is hovering around $81,317, showing very little movement. What we are seeing today is a market deeply divided. On one hand, the AI-driven tech sector continues to show remarkable strength. China's Chi-Next index surged 3.5%, injecting strong positive sentiment into global tech stocks. But at the same time, is rising sharply. The VIX spike tells us that fear and optimism are coexisting in a rare state of tension. We believe the dominant theme today will be heightened volatility at elevated levels, with a clear seesaw effect between tech growth stocks and safe haven assets. We put the probability of this scenario at about 70%. The capital flow picture is particularly interesting. We are seeing a dual-track allocation strategy taking shape. One track is money pouring into AI computing power and semiconductor stocks, riding the global tech wave. The other track is capital flowing into gold and crude oil, hedging against geopolitical risks. This dual approach tells us that investors want to participate in the tech rally, but they are also deeply concerned about the geopolitical backdrop, especially the situation in Iran. Looking at the macro picture, the pressure is unmistakable. The 10-year yield moving to 4.38% effectively rules out any near-term rate cut expectations, putting sustained pressure on risk asset valuations. The dollar index at 97.94 is draining liquidity from global markets. Inflation expectations are heating up again, with Brent crude above $103 and gold at record levels. The geopolitical risk factor is now the primary pricing variable in this market, with a probability of 85%. The Iran situation is the direct catalyst behind the VIX spike from its recent lows. For specific asset classes, we see U.S. equities trading in a weak to range-bound pattern. Despite the strong AI narrative, the VIX breaking above 18 is a clear warning signal. Breaking through previous highs will be extremely difficult given the dual pressure from interest rates and the dollar. In China, the A-share market is being driven by domestic capital. The Chi-Next surge reflects concentrated bullish sentiment in tech names. Bitcoin is losing its effectiveness as a risk appetite barometer. It is consolidating around 81,300, unable to follow tech stocks higher. Gold and crude oil prices already include a significant geopolitical risk premium. Investors should be prepared for a sharp reversal if tensions ease. Our trading strategy for today is one of hedging. The market is caught between a strong trend in AI and strong risks from geopolitics. Going all in on either side carries too much risk. We recommend a balanced approach, holding both tech growth assets and safe haven positions simultaneously. If the VIX breaks above 19, increase your allocation. If it falls back below 17.5 and yields decline, add to tech positions. But if there is any clear signal of de-escalation in geopolitical tensions, reduce safe haven holdings immediately. Let me give you our key predictions for today. First, we expect the VIX to close above 17, and the Nasdaq 100 to have an intraday range exceeding 1.5%. Second, China's Star 50 index will continue to outperform the CSI 300, but tech gains will narrow in the afternoon session as global risk aversion spreads. Third, Bitcoin will likely trade within an 80,000 to 82,500 range over the next 24 hours, unable to break higher. Fourth, any negative headline from the Middle East during U.S. trading hours will push WTI crude back to test the $98 level. And fifth, The usual negative correlation between the Nasdaq 100 and gold may weaken today, with both assets potentially moving in the same direction at times, reflecting the between tech conviction and demand. Our final probability assessment gives a 20% chance of an up day, 45% for a sideways session, and 35% for a decline. In this environment of high volatility and conflicting forces, the key is to stay flexible, manage your risk carefully, and wait for the picture to become clearer. Thank you for watching, and we will be back with more updates throughout the trading day.